Hi everyone, in this video I'm going to show you the first steps in futures trading and BitSpreader. After registration and after selecting a subscription plan, the next step is to set up API keys. API keys are unique identifiers provided by the exchanges used by BitSpreader to connect and to trade on the exchanges on your behalf. Cryptocurrency exchanges enable third-party applications like BitSpreader to execute orders on behalf of their users with the use of API keys. Let's go to Deribit and let's create a new API key. We encourage you to create a new API key on each exchange that is dedicated only to trading with BitSpreader. We need to set proper permissions on the API key. Set account and wallet to read level and trade to read write level. Now let's add the newly created key to the BitSpreader. Click API keys in the main menu and click Add API key. Let's select Deribit and let's add our key and the secret. BitSpreader validates the key and now we're ready to start trading. Let's make sure we have some funds available for trading. We can do this in the balances section of the BitSpreader. Let's open spread trading terminal. We start from selecting a spread with which we want to trade. First choice is the futures type, coin margined or USD margined. Majority of the futures offered on Deribit are coin margined, so let's stay with this choice. Coin margin futures use base currency of the instrument as the currency in which margin is controlled. We will be trading on BTC USD contracts, so we need to have some BTC in our wallet. Each spread consists of two contracts that we call legs. We need to pick the exchange and the instrument for the first leg and then for the second leg. We can do this from these drop-down menus or we can use spread matrix for that. For now, let's search for the spread between Deribit March and December. After choosing the spread market, we now can see the chart and the order book for the spread. Let's take a look at the historical levels of the spread. We will be buying the spread, so let's switch the spread chart to the spread as price. To understand what's the best time to enter and exit a spread position, I encourage you to see our other video on the profitability of the spread trading. In short, as you can see, the spread moves in a pretty regular horizontal channel. We want to buy at the bottom of the ask price channel and sell at the top of the bid price channel. We also need to take the trading fees under account. As the default leverage for Deribit is 50, if we want to open spread trade with size of $1,000, we need to provide the equity worth $40 on our trading account as a margin for the spread trade, $20 for each of the legs of the spread trade. As we have chosen coin margin instruments for our trade, we need to provide our margin amount in BTC. Let's buy the spread at its current price with the use of market order. In order to buy the spread, BitSpreader will execute two simultaneous trades on the exchange. It will open a long March position and it will open a short December position. Let's set the size to $1,000 and let's click buy. BitSpreader has created an open spread position that consists of two outright positions, long March position and short December position, each with size of $1,000. The opening spread price was $48. Here we can see the profit and loss calculation. In spread trading, we always lose on one leg of the spread, but we earn on the second leg. The key advantage to futures spread trading is that during the time our position is open, we are not exposed for the moves of the price of the underlying instrument, that is BTC. In case BTC price goes up, our long contract compensates for the losses in the short contract and the same in the opposite direction. We can use auto trigger order to try to close our position at certain price level. To do this, we go to the auto trigger order tab and we set the triggering price to our target price level, for example $80. We set the size to $1,000 and we click sell. BitSpreader will execute the trade as soon as it receives the signal from the exchanges that the ticker price has reached the triggering price level. Actual price for which the spread will be sold may be different from the triggering price. trigger buys the spread with the use of 2 market orders, and we need to be aware that the slippage is always possible as the market moves very fast. And this is it, thank you for watching. Check out our other videos on future spread trading and BitSpreader.